Hello Internet, thanks for joining me today. We are talking Alibaba Group, ticker BABA. Before we get started, as always, subscribe, like, comment below. I would absolutely appreciate your feedback. So Alibaba Group, founded by Jack Ma in 1999 and still sitting as the CEO today, is a Chinese e-commerce conglomerate focusing on consumer-to-consumer, business-to-consumer, and also business-to-business sales services. They also have electronic payment services, as well as a shopping search engine and data-centric cloud computing services. Really what I'm saying is that they touch a lot of fields. Since their inception as an IPO in 2014, they are currently the 6th largest market cap in the world and the largest Chinese company. They actually set the record for the largest IPO in history, surpassing ABC Bank and ICBC Bank respectively, both of those being Chinese-based banks. Here I present a slide showing you the distribution of e-commerce sales in 2014 versus 2016. Disclaimer here, Tmall.com is actually a subsidiary of Alibaba. So we can see that despite some nibbling away at the market share, Alibaba still holds over 56% of the e-commerce transactions and the gross merchandise value, absolutely crushing it. So this has helped the stock to float up quite drastically, and in fact this year the stock is up over double, from around $90 at the beginning of the year to up over $180 currently. When we look at financial strength and profitability ratios, we see nothing but green grass. In the bottom left corner, we can see 18.6 return on invested capital percentage. That is great. Cash to debt is great. The couple of things to really call out before, as I said, the invested capital return, but also the net margin at 30.8%. Absolutely ridiculously great, as you can see in the top percentages of the industry. All of this is despite the fact that they're not doing as good as they have in the past as a company, which is inevitable considering the rocket-like start that they got. So Alibaba is a very, very strong buy in my opinion, and a very easy stock to own and sleep well at night. All of this said is before the huge announcement they made today. Alibaba bought a 36.2% stake for roughly $2.9 billion today, November 20th, in Sun Art Retail Group from Ruintex. So what this deal allows them to do is to have a footprint in offline merchandisers across 446 hypermarkets in 29 provinces throughout China. Absolutely massive footprint. When I was looking at this earlier, if I'm remembering correctly, it's over a 12 million square acre footprint of retail space that they now have a 1/3 stake in. Really, this is not them reacting to Amazon. This is something they've been stepping towards. In fact, well before Amazon. Here we can see that Alibaba, and part of their new retail strategy, as far back as 2 years ago, was to expand out into supermarkets. The Hema chain, which was started by Alibaba, is a chain of digitized physical supermarkets where shoppers can use mobile apps for online orders as well as in-store purchases of groceries, freshly prepared foods, etc. This was mostly a research test, but we can see where that test was leading them. In June, Alibaba agreed to an 18% stake in supermarkets with the aim of boosting business efficiency and customer experience. Alibaba also led with a $300 million investment around one of the largest online fresh produce providers. And then again in September, they announced plans for a $15.2 billion investment over the next 5 years to strengthen and expand these logistical networks. So far from following the trend, if anything, they're blazing the path. And with the market share that China presents, there's a lot more room for growth, in my opinion, than, say, an Amazon or a Facebook here at home. So some final thoughts around this company. First, I'd like to start by saying Alibaba is part of my portfolio. I believe that this online retailer, despite slowing growth in the sector, will continue to crush year over year. Many customers still prefer to shop offline and will continue to do so going forward, but I believe these attempts by Alibaba and Amazon to curb this showroom effect is really going to help bolster confidence of those that aren't already online shoppers. And the ability to control that showroom effect will also allow them to strategically form the opinions of those that are using it against companies like Best Buy and Walmart right now. All of this, coupled with strong measurables and future guidance and great leadership from Jack Ma, makes this an absolutely must-own stock in my opinion. Thank you so much for your time. Please subscribe, like, comment below. Any questions, concerns, feedback you may have is absolutely appreciated. Have a great day.